Hi friends, good evening. How are you? So exams are nearing and I know your preparations are going in a full-fledged mode. So tell me, बताओ कैसे चल रही है preparations? All set for your examinations? Okay, now just one question for you. Am I audible, visible properly? Reply that and then we start with the today's session. Yes, you all were waiting. Marathon of CA Final Advanced Auditing. Thank you, Bala. Thank you, SK. Thank you, Vinay. Thank you, Sandeep. Thank you, Guru, Sweta. Okay, great to have you all. Now, let's begin with our today's session. Now, see, we are having a total 20 hours. I repeat, 20 hours revision for your CA Final Advanced Auditing. So, all chapters will be covering it. Yes, but all the important things will be listing it out. Now, sir, would we be doing any questions in that? Answer will be no. We'll be focusing more on theories. Now, sir, would there be any new material given for this? Any summary material? I tell you, I personally believe in your CA final auditing paper, lot of cornering is done. Yeah, if you see the papers are such that there's lot of cornering questions are there. So better is we revise from our regular material only. I repeat, better is we revise from our regular material only. The summary material practically will not work for your examination. In our material, we have all the important things which are highlighted. What I'll be doing is, I'll be keeping our regular material, a fast track batch ka material, open over here. If you are not attended fast track batch, it's fine. You can keep your regular material open. Now, sir, we have not studied from you. Someone who has not studied from me, you can keep your material open. It's okay, you can keep your material open. This is just for revision purpose. Any material which you referred, keep that base only. See, last moment we cannot change the material. If I go on changing the material last moment, definitely this is not going to work. The first important thing, we will stick on to the material which is provided to us. I'll be opening but only the theory part of the material which has been given to you. Number two, after we are done with this revision, like we have from 14th to 18th, 14 November to 18 November, after we are done with this revision, I'll have a mock test basically for this auditing paper. The auditing paper mock test will come up, sir, kab aayega? On 18th of October, 18th of November itself, I'll be coming out with it. Reason is we have revised it, then we write down a mock test. So there's no point writing a mock test without revision. So please make sure you first revise the entire subject, then you write down a mock test. Third thing, sir, where can I find your material? If you just see the chat box, there is one of the message at the beginning. There's a link for material. Or else you can do one thing. You can go to my Telegram channel. Telegram channel is CA Niket Thaker. You can find out a link for material. All material ka there's only one link given over there. You click on that link, you'll find out my FR material as well as my auditing material. So that material will be over there. And I told you, you need only the material which you have referred. Don't try to go for new material. Whatever material, our material referred, well and good. Some other faculty ka material referred, still it's fine. Just keep that open. That will be a base. This revision will be a thorough revision. I repeat, it will be a thorough revision of all the topics of your advanced auditing. And I just make sure this is total 20 hours. Today we have 7 to 10:30. Tomorrow onwards, it is basically your 6 to 10:30. We have 6 to 8, one session, 8:30 to 10:30, another session. Today, both the sessions, 7 to 8:30 and 9 to 10:30, both sessions today are on YouTube. From tomorrow onwards, the sessions will be on Unacademy's app. You need to go to Unacademy. They are free classes. They are free classes, free special class at Unacademy. You can use code Yeshas, YESHAS, Yeshas or Yeshas Live. That will unlock the free classes, and the link of the lectures are already circulated on my Telegram channel. Again, I'm telling you, the Telegram channel is CA Niket Thaker. The material you get over there, the link for the free lectures you get over there, everything is available over there. And these are the things at the last moment that will help you crack your CA final examination. We'll be doing a thorough revision. Now, before I start, I'll just share with you one new feature of Unacademy. This is called as an iconic subscription. Now, at Unacademy, we did not have the physical material. Many students wanted a physical material. We have it in iconic program. Many students wanted test papers to be evaluated. In the Plus subscription, we did not have it. In iconic program, we have it. Yes, you're also assigned one mentor. You need sometimes a mentor to you under this iconic program. The iconic program, what are the extra features which we are having? We have one-to-one doubt solving. A special doubt solving dedicated team is there for you. Evaluated test series is there. Printed material will be provided to you. And yes, live classes are there. You can see the recorded backup at Unacademy. And see, I tell you, you have an option to watch the recorded backup with unlimited viewing rights. It's not 1.5 times you or 2 times you. It's unlimited viewing rights you're having at Unacademy. Plus, one thing which happens is, suppose you've taken a subscription of 3 months or 6 months or 1 year, you're allowed to access everything on Unacademy. You can watch the regular batch also. If you're hard pressed with time, you can switch over to the fast track batch also. Everything is available to you. Iconic mein, mentoring is there. Evaluated test series is there. And you can use code Yeshas Live. You'll get 10% discount on subscription. Yeah, just share it to all your friends as well. Let's begin with our today's session. Sir, how are we starting? How are we starting? We're starting today with the chapter called Company Audit. So Company Audit together with Schedule 3. So 3 hours mein, in this 3 hours, 7 to 8:30 and 9 to 10:30. In this 3 hours, today we'll finish off chapter number 5 with your Schedule 3. Tomorrow we'll start with professional ethics, and then tomorrow we'll start with your auditing standards. Sir, would we be doing the other chapters like bank, insurance, NBFCs? Would we be doing that chapters also? Answer is yes. All chapters which are there in ICI material, all chapters ka revision we will be conducting. But first we are starting with the 3 most important chapter: company audit, professional ethics, and the last one is your standards. These are the 3 most important. Shall we begin? Chalo, how's the Josh? Okay, let's start with the chapter. Again, material, whichever you referred, keep that open. Our material, all important things have been highlighted. So this is the same material which you are having. Only thing is I've removed the questions in between. Only theories we are revising, questions are not required as such. So all theories we are revising it. This is same material what you are having. Let's begin. We have company audit. Now company audit is audit as per your Companies Act. Under your Companies Act, we have few provisions relating to audit of company. We have few provisions relating to accounts of company. The audit provisions are section 139 to section 147 of your Companies Act, and your accounts ke provision, the 139 to 148 is audit provision. Accounts are section 128 to section 137. So first let's revise the audit related provision, and then we go to accounts related provision. Okay, starting with first of all qualification, disqualification of an auditor, section 141. You need to keep on replying fast. Okay, who is qualified to be an auditor of a company? It's a chartered accountant within the meaning of Chartered Accountants Act 1949. Now, Chartered Accountants Act 1949 says in order to become an auditor of a company, you need to hold COP. The word is Chartered Accountant within the meaning of Chartered Accountants Act 1949. As per CA Act, you need to hold COP. Now, sir, can a firm be appointed as auditor? Yes, majority of the partners should be Chartered Accountant and they are qualified for appointment. Means majority should be Chartered Accountant holding COP. See clearly the word written, majority. Majority should be Chartered Accountant holding COP. And whenever a firm is appointed, only the partner who is a Chartered Accountant can sign. Only the partner who is a Chartered Accountant can sign. This is qualification. Let's go to disqualification. Disqualification is section 141 subsection 3 and 4. We are doing first of all section 141 subsection 3. Under section 141 subsection 3, who is disqualified to be an auditor? First, a body corporate other than an LLP. Body corporate other than an LLP. Now, LLP is also a body corporate, but it's specifically excluded from disqualification. The company cannot be auditor of another company. Second, officer or employee of the company. Officer or employee of the company, he is disqualified only for that company, not the group. I repeat, he is disqualified only for that company, not the group. For example, CA Mr. A is part-time working with X Limited and is also doing his practice. CA Mr. A is part-time working with X Limited, also doing his practice. Can he be the auditor of X Limited? Answer is no. He is disqualified for that company. Now, sir, can he be an auditor of a group companies? Can he be an auditor of the group companies like subsidiary, associate, holding? Answer over here will be yes as per Companies Act. Answer over here will be yes as per Companies Act. He is disqualified only for the company, not the group. Okay, but I tell you, as per your Chartered Accountants Act 1949, if you go to Chartered Accountants Act, if at all you are in part-time job also, you cannot do attestation function. So if at all you are in job, part-time bhi hai, you cannot do attestation function. So practically this becomes kind of not applicable jaisa. Okay, next one. A third, a person who is a partner or an employee of the officer or employee of the company. Okay, officer or employee of the company disqualified, their partner or their employee also disqualified. For example, CA Mr. A is working in X Limited and CA Mr. A is also a partner in ABC & Co. Chartered Accountant firm. CA Mr. A is working in X Limited, is also a partner in ABC & Co. Now, CA Mr. A is working in X Limited, CA Mr. A disqualified as per clause B. CA Mr. A disqualified as per clause B. And see, when you are disqualified, your firm is also disqualified. Sir, ye kahan diya hai? Where is it given? When I am disqualified, firm is also disqualified. See, very clearly, firm is always known by its partner. Firm is always known by its partner. If you are disqualified, your firm is always disqualified. Now, point number C says partner of the officer or employee. So, CA Mr. A is working in X Limited, CA Mr. A disqualified, uske partners. He's a partner in ABC & Co. The B and C are also disqualified. Next, a person who or his relative or his partner, you or your relative or your partner is holding any security or interest in the company or its group. Now see the word written. Company, subsidiary, holding, associate or subsidiary of such holding. Means if you, your relative or your partner holds any security in the company or its subsidiary or its associate or holding or other subsidiaries of same holding, pure group mein, then you are disqualified. Now, relative is allowed to hold up to a face value not exceeding 1 lakh rupee. The relative can hold up to a face value 1 lakh and the 1 lakh is for all relatives together. It's not individual relative, it's all relatives together. Okay, the check over here, if you are holding any security or interest in the company or group, you are disqualified. Relative may hold up to a face value not exceeding rupees 1 lakh. Now, Act has used the word relative can hold a face value 1 lakh in the company. Now, Act has used the word relative can hold up to a face value 1 lakh in a company. According to me, it should be interpreted not just as company, but in the entire group. Reason, if relative is allowed to hold in a company, what's the problem if relative holds in subsidiary or associate or joint venture? Wahan pe there's no issue, na? If you are allowed to hold in a company, you are also allowed to hold in the group as well. Now, one more thing, if relative holding exceeds 1 lakh, 60 days are given for the corrective action. So you become disqualified not immediately, but you become disqualified after that 60 days. Now, sir, who is covered in the word relative? Who is covered in the word relative? A question related to that was asked earlier. The relative will include your father, mother, brother, sister, spouse, father, mother, brother, sister, spouse, son, daughter, son's wife, daughter's husband. It's kind of one chain. Yeah, it's only your family, it's not extended, not your grandparents, not your uncle, aunt, वो कोई covered नहीं है. It's father, mother, brother, sister, spouse, son, daughter, son's wife, daughter's husband. Important over here is the son's wife, daughter's husband. And nowadays people are habituated to marry more than one, so steps are also included. Stepmother, stepfather, stepson, stepdaughter, that all are included. Okay, moving ahead. Same one, if you, your relative or your partner is indebted to the company or group for amount exceeding rupees 5 lakh, then you are disqualified. Now this 5 lakh limit is you plus your relatives plus your partners together. It's not individually, it's all of them together. Next, if you have given a guarantee, you, your relative or your partner has given a guarantee to the company or group for an amount exceeding rupees 1 lakh for a debt of third person. Okay, if we have given a guarantee to the company or group for a debt of third person amount exceeding 1 lakh, we are disqualified. Next one, if we have a business relationship, with a company or its group, we are disqualified. Now exception is given. What is the exception over here? Now chartered accountant rendering services of professional nature. See, you give services to the company. That's again a business relationship. That is not covered under disqualification. That is specifically excluded from disqualification. And number 2, certain class of industries, if at all we have a transactions the arm's length price. Yeah, certain classes of industry, if we have a transaction at arm's length price, we are not disqualified. If you have a business relationship, the word clearly written, business relationship with the company or group, then we are disqualified. Here also word is company or group. Next one, F point. Video is lagging. Just a minute. Is it coming proper or still lagging? Is it still lagging or is it fine now? Lagging. Okay, is it fine now? Just please let me know. Audio, video. Okay, I think it will be proper now. Let's move ahead. Let us move ahead. Just a minute. Okay, now we are doing section 141 subsection 3, that is disqualification of auditor. Point number F. Now we have reached. A person whose relative is a director or a KMP, then you are disqualified for that company, again not the group. Now if your relative is either a director or a KMP, then you are disqualified. If your relative is a normal employee over there, you are not disqualified. Next, if you are in full-time employment elsewhere, see, if I'm already in full-time employment elsewhere, I don't have a time to do audit, and that's why they say if you're full-time employment elsewhere, you're disqualified. Or if you're already holding 20 audits, then you're disqualified. But the 20 audits will not include, which one will not be included? One-person company, dormant company, small company, private limited company having a paid-up capital less than 100 crores. Now, very important, private limited companies having a paid-up capital less than 100 crores, they're exempted if at all they have not defaulted. If at all they have not defaulted in filing annual accounts and annual return. If at all they have defaulted in filing annual accounts, annual return, then they are to be included in the limit. Otherwise, they are not to be included in limit. Next. Now, whenever I'm counting this limit of 20, that limit of 20 is basically for a chartered accountant who is in practice. If I have a firm, I need to take out all the partners who are chartered accountant holding COP. All the partners who are chartered accountant holding COP plus audit in your individual name, an audit in your firm name, everything to be combined and then is to be seen. If I have 5 audits in my individual name, in my firm, I can be taking only that 15 extra audit in my name. And this limit is only for your company audit. For tax audit, there is a separate limit of 60 tax audit. Okay, now this they say that you can do maximum 20 company audits, but 20 may following are not included. Private limited companies, paid up capital less than 100 crores not included. Question, can I do private companies unlimited? Can I do private limited companies unlimited? Answer is no. You cannot do private limited companies unlimited. Reason, our Chartered Accountants Act. Our Chartered Accountant Act says if you are holding more than specified number of audits, you are basically guilty of professional misconduct. And they say that you can do together with private companies total 30 audits. As per your Chartered Accountant Act, together with private companies, we can do maximum is 30 audits. In that 30, OPC and dormant companies are not included. OPC and dormant companies are not included in this 30. This is including small private companies as well. So, sir, do we follow this? Do we follow Companies Act? We follow both. Do we follow this? Do we follow Companies Act? We follow both. So, including small private companies, it is maximum 30. All big wale, maximum is 20. Okay. Next, a person who has been convicted by a court of an offense and he has been of an offense involving fraud and 10 years is not elapsed since the date of conviction. Now see, the word is convicted. It's not case going on. You're held guilty. You've already been held guilty and for offense involving fraud, 10 years have not yet elapsed. You're disqualified for a period of 10 years. And last one, if you are rendering services covered under section 144, you are disqualified. Now, such services you should not be giving to the company or its holding company or the subsidiary company. Company, holding company or subsidiary company. Okay, I'll come back to this. Now, section 141 subsection 3 was this. Section 141 subsection 4 says, what does it say? If at all you become disqualified later after you are appointed, you become disqualified later, you're deemed to have vacated your place of office as an auditor. Now, section 144, which are the services which you cannot be doing together with being an auditor? Together with being an auditor, following services should not be rendered directly or indirectly to the company or its holding company or its subsidiary company. Sir, can I give it to their associate company? Yes. You should not be giving to the company or its holding company or its subsidiary company. And this should not be given directly or indirectly. Sir, what is directly or indirectly? I should not be giving it. My partner should not be giving it. My firm should not be giving it. My network firm should not be giving it. My network company, chartered accountant creating a company for providing consultancy services. Chartered accountant creating company for providing consultancy services, they also cannot be giving it. If our firm is auditor, company which we have created, that cannot be giving the services. So which are the services? Accounting, bookkeeping, internal audit, design implementation of financial information system, actuarial services, investment advisory, investment banking, management services, any other services as may be prescribed. Others may, there's nothing prescribed till now. Okay, now suppose this came up in this new act. Old act may you are allowed to give this services as well as you are allowed to become auditor. So if I was an auditor also, I was giving this services also in the old act. Then with this new act coming, within 1 year, you had to select whether you want to continue with this services or whether you want to continue with the statutory audit. So you were giving this services, you are given 1 year time to decide what you want to continue. Next, we have one small question. Can a statutory auditor act for a same company? Word same is important. As internal auditor, answer is no. Internal audit is not allowed. Okay, can you be a tax auditor or a GST auditor? Answer is yes, same company. I am a company auditor. Can I also be a tax auditor? Yes. Okay, can I act as a consultant for the services other than 144? Other than 144, yes. But for the services covered under 144, answer is no. And can I be a liquidator of the same company? Answer is no. You cannot be a auditor and liquidator of the same company at the same time. Same company ka you cannot be. Other companies ke this company I am a auditor and suppose subsidiary ka liquidator, wo chalega. Subsidiary is liquidator, fine. Yahan pe you cannot be of the same company over here. Next. This was qualification, disqualification, section 141. Come to section 139. Come to section 139, that's appointment. Repeat again, today 3 hours we'll finish off company audit with schedule 3. Tomorrow we'll do professional ethics and we'll start with the standards tomorrow. Total 5 days, 19 to 20 hours. Now, first auditor. Who will appoint the first auditor? I told you first auditor ke liye we cannot call shareholders meeting, and that's why the power to appoint first auditor is given to Board of Directors. BOD has to appoint it within 30 days from the date of registration of the company. If board fails, they have to inform to the members, and then the members will appoint in 90 days by holding a EGM. Now question, 90 days are from which date? Once that 30 days over, uske baad 90? Yeah, 90 days from the registration only. So are they using the word next 90 days? No, it's not next 90 days. That's why this 90 days will be from the date of registration. Okay, so it's kind of first 30 days. First 30 days BOD has to appoint. If they don't appoint, they will inform shareholders. Shareholder has to appoint in 90 days from the registration date. From starting only, not from the day when they are informed. It's from starting date only. And the first auditor will hold the office till the conclusion of first AGM. He'll be there only till first AGM. He will not be there for 5 years. He's only till the conclusion of first AGM. Now, by writing a name in MOA, AOA, a person does not become auditor. We write someone's name in MOA, AOA, would he become auditor? Answer is no. Managing director himself cannot appoint the first auditor. The power is given to board of directors. And first auditor is appointed till the conclusion of first AGM. It doesn't mean that he audits till that much time. No. Your appointment is AGM to AGM. Your appointment is AGM to AGM, but what you will audit? You will audit the financial statements which are presented to shareholder during your period of appointment. You will audit the financial statements which are presented to shareholder during your period of appointment. The appointment is AGM to AGM. You don't audit AGM to AGM. You audit till 31st March only. Okay. Now, suppose the board of directors don't appoint, power goes to shareholder. What if the shareholders also don't appoint? What if the shareholders also don't appoint in that 90 days? If shareholders don't appoint in 90 days, does power go to CG? Answer is no. Power doesn't go to CG. Shareholders only will appoint, but as they're appointing late, there will be penalty. Shareholders only will appoint, but as they're appointing late, there will be penalty. This was a normal company. Now we go to government company, that is 139 subsection 7. Okay, government company, who will appoint the first auditor? First auditor of government company will be appointed by C and AG within 60 days from registration of the company. It is C and AG within 60 days from registration of the company. If C and AG fails, BOD will appoint in next 30 days. See, clearly word next likha hai. Next means 61 to 90 days. Over here word next is there. Earlier the word next was not there. So then this BOD will appoint next 30 days. Clear? Okay, sir, what if this BOD does not appoint in next 30 days? BOD only will appoint. Power doesn't go to shareholder. Here power doesn't go to, this is board will appoint in next 30 days. If board fails, they will inform to the members who shall appoint within 60 days at an AGM. Okay, so if board will fail, they will inform to the shareholders. Shareholders will then appoint in 60 days. Yahan pe 60 days will be from, again word next is not written. Interpretation will be from. It will be from that 61st day. AGM, CAG was appointing in 60 days. वो 60 days से next 60 ऐसे गिनेंगे. And if the shareholder also don't appoint in that period, they will only be appointing, but as they're appointing late, the penalty will be applicable to them. And the first auditor again will be holding office till the conclusion of first AGM. Okay, so normal company, it was 30-90. For this, it is basically 60-30-60. Next, subsequent auditor. Going to the subsequent auditor, how will be the subsequent auditor be there? Okay, first for a normal company, first auditor was appointed till the conclusion of first AGM. Now the first AGM came. At first AGM, the shareholders, AGM is of shareholders, they will appoint an auditor who shall hold office from the conclusion of first AGM to the conclusion of sixth AGM. And the word is shall. So now the shareholders will appoint auditor who shall hold office from the conclusion of first AGM to the conclusion of sixth AGM. That is for 5 years. And again 5 years. The 1 to 6, 6 to 11th, 11 to 16 and so on. Now, procedure for appointing. We say shareholders will appoint, but really shareholder appoint? Answer is no. Shareholder just puts a stamp. They don't go for selecting the auditor. Sir, who will select the auditor? Competent authority. Sir, कौन है competent authority? If a company is required to have an audit committee, the competent authority will be the audit committee. If a company is not required to have audit committee, the competent authority will be the board of directors. So this audit committee will go for searching which will be a good firm for our company. They will basically go for searching it. The audit committee will recommend the name. Audit committee will recommend the name to board of directors. Board of directors will then recommend a name to the shareholders. Shareholders will put a stamp. The audit committee to board of directors to shareholders. Shareholders will put a stamp. Now, suppose audit committee recommended the name to board of director. Board rejected. If board rejected, the audit committee has to come out with a new recommendation. If audit committee comes out with the same recommendation again, then the BOD may accept it, or BOD now may not accept again, and now BOD will not wait for audit committee's recommendation. BOD can give their own recommendation to shareholders, and then shareholders will appoint. Sir, for appointing, which resolution required? We need an ordinary resolution of shareholders. Okay. Now, very important, before we appoint an auditor, we need to take a written consent from them and a certificate from them. What will be there in that written consent and certificate? Consent is they are ready to accept the appointment. Certificate will contain 4 things. So which are the 4 things contained in certificate? 1, they are not disqualified from appointment. The appointment is as per the terms of the act. It is within the limits. And they will also give a list of proceedings which are going on against a chartered accountant or a firm, and they will certify it as true and correct. The 4 things are there in certificate. This is important. Now, once the shareholder appoints, ordinary resolution is passed, then the company has to inform to the ROC as well as to the auditor concerned, and to ROC they will file form number ADT1 within a period of 15 days. The company will inform the auditor, file as well as file ADT1 with ROC within a period of 15 days. Next. Now, sir, which companies are required to have audit committee? This is important. Which companies are required to have audit committee? First, all listed. All listed companies, it is mandatory. Together with listed other companies. Sir, which are the other companies? Only public are there, not private. Public company having a paid up capital 10 crores or more. Public company having a turnover 100 crores or more. Public company having outstanding loans, borrowings, public deposits, debentures exceeding 50 crore. यहाँ पे word is exceeding 50 crores. Okay, the paid up capital 10 crores or more, turnover is 100 crores or more, and your outstanding loans, borrowings, debentures, public deposit exceeding 50 crores. But only public company, it does not apply to private companies. Listed में mandatory, don't see the limits. Next. Now going to subsequent auditor for a government company. This was a normal company, now we go to a government company. For a government company, the subsequent auditor again will be appointed by CNAG, and CNAG will appoint within 180 days from the commencement of the year, and that person will be there for how much time? How much time? Is it 5 years? Answer is no. They're just telling till the conclusion of AGM. Now which one? Next bhi nahi likha hai. They're not writing next AGM. It can be 1 year, it can be 3 years, how the CNAG appoints. But the auditor appointed by CNAG is not for 5 years. Generally, I've seen appointment is for 1 year or 3 years. Next is casual vacancy. Next is casual vacancy. Sir, what do you mean by the word casual vacancy? Casual vacancy is nowhere defined in Act. Casual vacancy is nothing but auditor was validly appointed, his tenure was going on, and in between, he was validly appointed, tenure was going on, and in between he expires or he resigns or he is removed or he becomes disqualified, anything. He expires, he resigns, he is removed, or he becomes disqualified, anything. That's called as a casual vacancy. Now, sir, how to fill the casual vacancy? Normal company, it will be filled by board of directors within 30 days. If it is due to resignation, board will basically fill it in 30 days, but that's not final. It has to be approved by shareholders within 3 months of recommendation of BOD. So it is to be filled by BOD within 30 days. If it is by resignation, it is to be approved by shareholders within 3 months of recommendation of BOD. 3 months is from recommendation of BOD. See, this date become useful because now we have this MCQs 30 marks, and MCQs are not very simple. It will be based on these dates. Unless you are clear with these dates, you will be finding it a bit complicated otherwise. Okay, now for a government company, who will appoint that casual vacancy may auditor? The government company casual vacancy is filled by C and AG. If C and AG fails, it will be filled by board of directors in next 30 days. Okay, now suppose we appointed an auditor to fill the casual vacancy. That auditor did not accept the appointment. If that auditor did not accept the appointment, then the casual vacancy continues. Okay, now the firm which we have appointed, a CA firm which we have appointed, it was ABC and Co. They added one more partner, ABCD. We appointed ABC and Co. Now they added one more partner, that's ABCD. So there's a change in reconstitution. There's a change in constitution of a CA firm which we appointed. They added one partner, they removed one partner. Is it a casual vacancy? Answer is no. Is it a casual vacancy? Answer is no, because the firm is still there. See the substance. Casual vacancy will come up when all the partners go away and some new partners are joining, then that's a casual vacancy. Unless there is a total reconstitution, it is not a casual vacancy. So CA firm, one partner joining, one partner going out, it's not casual vacancy. Next one, reappointment of a retiring auditor. Now, there are two things. Section 139 subsection 9 is when can I reappoint the same auditor? And 139 subsection 234 is how many times I can reappoint the same auditor. This is when. 234 is how many times. Okay, so when can I reappoint the same auditor? For reappointing a same auditor, one, he should not be disqualified at the time of reappointment. He should not have given a notice of his unwillingness to be reappointed, and a resolution appointing someone else, or a resolution expressly telling that we are appointing someone else, that resolution is not passed. Okay, I repeat, he should not be disqualified. Second, he has not given a notice of his unwillingness to be reappointed, or a resolution appointing someone else, or resolution telling not to reappoint him. Such a resolution is not passed. Okay, Sandeep has a question. Sir, in case of a resignation, no time limit of 30 days for BOD recommendation. Sandeep, in that case also BOD has to recommend in that 30 days only. It has to be approved by shareholders within 3 months of recommendation of BOD. BOD ने recommend किया, उसके बाद it has to be approved by shareholders in 3 months. Okay, next one, if no auditors are appointed at AGM. Now see, word is very clear, AGM. Appointment happens in first AGM, then 6th AGM, then 11th AGM. So this is applicable when no appointment is done at an AGM. Imagine first AGM happened, shareholders did not appoint anyone. 6th AGM happened, they did not appoint anyone. 11th AGM happened, they did not appoint anyone. So what will happen in that case? Then the auditor will continue. Yeah, the auditor will continue. Sir, what if rotation was applicable? Rotation was applicable, still can I continue? According to me, answer will be yes, still you can continue. Reason: rotation is basically company has to rotate. Auditor don't have to rotate themselves. The company had to rotate the auditor. Company had to rotate the auditor. If they are not rotating, no auditors are appointed at AGM. Imagine. Individual can be there for one term. Now 6th AGM, 1 to 6 you were there, 6th AGM happened, they did not appoint anyone else. As per 139.10, you will continue. Okay. Now 139 subsection 234, it's rotation and term. 139 subsection 234 is rotation and term. Just a minute, water break. Lots of water keeps you fresh. So during your preparation time, just make sure every half an hour you have one sip of water. That will keep you fresh, you will not feel sleepy. Few small hacks. Now 139 subsection 234, rotation and term. Can I have a same auditor continued lifetime? They are telling rotation is applicable not for all companies but for big companies. One, it's for the listed companies. It applies to all listed and other prescribed. So who are covered under other prescribed? Other prescribed mein unlisted company paid up capital 10 crore or more, public company. Private company paid up capital 50 crores or more, and all the companies, public, private, all the companies having a public borrowing from financial institution, banks, public deposits, 50 crores or more. This is rotation applicable to whom? It's only to listed companies, other prescribed class of companies. If rotation is applicable, if you're appointing an individual CA, he can be there for maximum of one term, which is of 5 consecutive years. If you're appointing a firm can be there for a maximum of 2 terms of 5 consecutive years. The simple words, individual can be there for 5 years, firm can be there for 10 years. Now, whenever you're changing, suppose individual was appointed 1 term hai, firm was appointed 2 terms. After 2 terms are over, you are appointing a new firm. After 2 terms are over, you are appointing a new firm. There should not be a single common partner. It should not be a network firm. The new firm should not have a common partner. It should not be a network firm. Okay, now, sir, firm needs to be rotated after 10 years. Question, can the same partner do the audit for all 10 years? Firm needs to be rotated after 10 years. Can the same partner do the audit for that 10 years? Now, as per Companies Act, they say the members will decide whether the engagement partner and the team is to be rotated or not. Who will decide? The members will decide. But SQC 1, Standards on Quality Control 1, as per Standards on Quality Control 1, for listed company, only listed, rotation applies to listed and other prescribed class. Rotation applies to listed and other prescribed class, but that same partner can continue or not. SQC 1 says for a listed company, the engagement partner should be rotated after a period not exceeding 7 years. The same partner can do maximum for 7 years. After 7 years, he has to be changed. Listed में, other prescribed में नहीं. ठीक है. Now, sir, when I am counting the limit of 5 years, 10 years, the number of years which I worked under old act, whether they are also to be counted, answer is yes. The number of years which you have worked under old act, they are also to be counted in that. And sir, when this new act came, I already done 10 years. When this new act came, old act may already done 10 years. You say that how many years I worked in old act should be counted. So sir, I already worked 10 years. Should I leave immediately? You are given a transition period of 3 years. When this new act came, you're allowed to work for how many years? You can be auditor for how many years? The remaining period or 3 years, whichever is higher. Remaining period or 3 years, whichever is higher. Now, very important, this one. Imagine there was ABC and Co. We have appointed ABC and Co. And there were 3 partners, ABC. A retire from ABC. A retires from ABC and he joins AXY. He retires from ABC, he joins AXY. So can that AXY be appointed? Sir, he is not a common partner. He has retired or he is basically gone out from ABC and now he has joined AXY. Can we appoint AXY? Now pay attention. If Mr. A was the partner who was basically certifying this financial, if Mr. A was handling this audit, then AXY cannot be appointed. If Mr. A was not handling this audit, then AXY can be appointed. Now he is also there in ABC and is also there in AXY, then AXY cannot be appointed. Common partner A cannot be appointed, but he resigns from there, he withdraws as a partner from there and he joins a new firm. Can that new firm be appointed? Yes, unless that partner was certifying the financial over there. See the words written? If a partner who is in charge of audit firm and also certifies the financial statement of the company, he is in charge of audit firm and also certifies the financial statement of the company, retires from the said firm and joins another firm, then that new firm is ineligible. But imagine ABC mein A was not the person signing this financial. He was not involved in this audit only. Can that AXY be appointed? Answer will be yes. Next, 139 subsection 11. So 139 subsection 11 is very simple. They say, if at all you have an audit committee, if at all you have an audit committee as per section 177, all appointment including reappointment of auditor has to be done, the recommendation has to come from audit committee. Okay, the 139 subsection 1 was reappointment of normal company. 139 subsection 234 is rotation in term. 139 subsection 5 was a subsequent auditor, a government company. 139 subsection 6 is first auditor, normal company. 139 subsection 7 was first auditor, government company. 139.8 is casual vacancy. 139.9 reappointment of retiring auditor. 139.10 no auditors appointed or reappointed at AGM. And 139.11 is if you have audit committee, recommendation has to come from audit committee. Then we are done with two sections, 141, 139. Going to 142. Going to section 142. 142 is remuneration. Now, remuneration is fixed in general meeting or in a manner as is decided in general meeting. So I have a question. Can the power to fix remuneration be delegated by shareholders to board of directors? Answer is yes. Okay, first auditor, the remuneration will be fixed by board of director. Only first auditor, it's fixed by board of directors. Sir, casual vacancy may fixed in general meeting or in a manner as is decided in general meeting. Sir, government company, it is fixed in general meeting or in a manner as is decided in general meeting. They don't say separately CAG will fix remuneration. They don't say. Okay, so in government company, appointment is done by CAG, but fixing of remuneration will be in general meeting or in a manner as is decided in general meeting. Next is section 140. It's removal, resignation of auditor. Now 140 subsection 1. 140 subsection 1, removal of auditor before the expiry of term. Now when they say before the expiry of term, first auditor was appointed till conclusion of first AGM. Subsequent auditor from 1st to 6th, 6th to 11th, if they want to remove you in between, so what will be the procedure? If they want to remove you in between, they need a special resolution of shareholder as well as a prior approval of CG. First they have to go for CG. First, BOD will decide in a meeting, board meeting, that they want to remove the auditor. Then they will make an application to CG ADT2. They'll make an application to CG ADT2, and once they get the approval of CG, then within next 60 days they will hold a EGM and they will take a special resolution of shareholders. So first of all, board of directors will decide. After BOD will decide it, BOD ka resolution pass, 30 days may they apply to CG by way of form ADT2. CG's approval comes, then they hold a EGM, extraordinary general meeting, within 60 days of CG's resolution, and now they get the special resolution of shareholders and that auditor will be removed. Okay, so for removing auditor before expiry of term, CG's approval and special resolution of shareholders. Next is resignation by auditor. Auditor himself wants to resign. Can you resign? Yes, any reason is fine. Whenever you're resigning, you need to file form number ADT3. ADT3 auditor will file within a period of 30 days from the date of resignation. And you need to file with ROC, you need to tell to company, and you also have to inform to C and AG if it is a government company. If it's a government company, CAG appointed you, you also have to tell it to them. Also write down the reasons. And penalty, if at all you don't write reasons or you don't do it within 30 days ADT3, penalty is 50,000 rupees or your remuneration whichever is less. 50,000 or your remuneration whichever is less, plus this is minimum, plus further penalty 500 per day, maximum up to 5 lakh rupees. Further penalty 500 per day, maximum up to 5 lakh. Important, there is a question asked on penalty only. This point. The minimum penalty is 50,000 or your remuneration whichever is less. Further penalty 500 per day, maximum up to 5 lakh rupees. Next one, appointing auditor in place appointing auditor other than the retiring auditor. Section 140 subsection 4. Now, first of all, when do we have to appoint the auditor? When we have to appoint the auditor, so first AGM, 6th AGM, 11th AGM, 16th AGM, so on. This provision is applicable that time. First AGM, 6th AGM, 11th AGM, and so on. So that time, whenever you are a shareholder, see, you generally don't have a power to nominate the auditor. The selection work is done by audit committee recommends to BOD recommends to shareholder appoints. But this is the section which gives a power to the shareholder to nominate the auditor. If you as a shareholder, now the first AGM is coming or the 6th AGM is coming and you want that instead of Mr. A, they should appoint Mr. B, what you should do? You need to tell to the company. Shareholder has to tell to the company. That's why you call it as a special notice. The special notice, a notice from the shareholder will be required. Special notice you have to give it, sir. How many days pehle I have to give it? You need to give at least 14 days before AGM, not before 3 months of AGM. At least 14 days, not before 3 months of an AGM. And this notice, sir, who can give it? At least you should be holding 1% voting power or face value, not less than 5 lakh rupees. Either 1% voting power or face value not less than 5 lakh rupees. So you give a notice to the company that, sir, instead of A, appoint B, or sir, don't reappoint A. Don't reappoint A. Once you give the notice to the company will circulate the notice to all other shareholders. They will also circulate the notice to the retiring auditor whose term is getting completed. Retiring means his term is getting completed. But he is eligible for reappointment. And retiring auditor, as he is eligible for reappointment, he will not want the audit to go away. So what he will do? He has a right to make a representation of a reasonable length. The retiring auditor will give a representation to the company. Company has to circulate the representation to all the shareholder. If representation is received late, they need to read out the representation at an AGM. Now, sir, if representation contains something defamatory matter, if it contains a defamatory matter, then the company or any aggrieved person, they need to apply to tribunal, NCLT. If tribunal's approval comes, then no need to circulate it, no need to read out, no need to circulate, no need to read out the representation received from the retiring auditor. So see, this is the section which gives the shareholder a power to nominate the auditor. Next one, section 140 subsection 5. This is important. Section 140 subsection 5. This is important. It's direction by tribunal for the auditor who has acted in fraudulent manner. If an auditor has acted in a fraudulent manner and the tribunal is satisfied, so tribunal suo moto or on application by someone is satisfied that the auditor has acted in a fraudulent manner, the tribunal may order that the auditor should be changed. They will order the company, direct the company to change the auditor. If at all they are directing the company to change the auditor, now who will appoint the new auditor? Now normally when tribunal told me to change the auditor, this auditor goes in between, it's a casual vacancy. As it's a casual vacancy, now the appointment power will go to board of directors. But they have said if application is done by CG, the new auditor may be appointed by CG. It's just may be appointed by CG. If CG made application to tribunal ordered the company to change auditor, new auditor may be appointed by CG. Otherwise, it's a casual vacancy. It will be appointed by board of directors. And the auditor who is so removed, as per the tribunal's order, that auditor is out from this company as well as any other company. He cannot be an auditor for any other company for a period of 5 years. Now someone asked me, sir, in 143 subsection 3, sorry, 139 subsection 3, it was uh, disqualification mein, if you are guilty of an offense involving fraud, you are disqualified for 10 years. If court ordered you guilty, disqualified for 10 years. Tribunal ordered you guilty, you are disqualified for a period of 5 years. Clear with this? Okay, so this was your section 140. Any doubts? Anybody till now? Okay, let's move ahead. We go to powers of auditor, section 143, duties and powers. First of all, we go to the powers of auditor. Some powers are given under section 143 subsection 1, and there are some other powers as well. Now 143 subsection 1, 4 simple powers. Your right to access books of accounts and vouchers. Books of accounts includes your financial, non-financial, all books. Vouchers are nothing but the supporting documents. This power is not only for the things kept at registered office, this is also for the things which are kept at branches also. HO auditor has a right to access branch records. Branch auditor cannot access HO's record. Second, you have a right to get necessary information, explanation from the officers and employees of the company. Third, you have a right to access the records of subsidiary and associate so far as it relates to consolidation of financial statement. If you're auditing CFS, you also have a right to access the records of subsidiaries and associate. And last one, right to report to the members for the accounts examined by you. So you have a right to report to members. They cannot stop you from reporting. These are powers given under 143 subsection 1. Now some other powers, section 146. Now you have a right to receive notices of and attend the general meeting. General meeting will include your AGM as well as EGM. You cannot attend board meeting. You have a right to receive notices of as well as attend the general meeting, and they've written the word auditor shall. Auditor shall attend the general meeting unless exempted by company. Okay, so pay attention. So, sir, is it mandatory for me to attend the general meeting? Answer is yes, unless if you don't want to attend, take an exemption from the company. So, board of directors को आप apply करो that sir, in this meeting accounts finance are not being discussed. It's not relevant to me. Please give me exemption. They'll give you exemption. But if you want to attend, they cannot stop you. If auditor wants to attend the general meeting, board of directors cannot stop. If auditor does not want to attend, he has to take an exemption. Can auditor attend board meeting? Answer is no. Can you attend audit committee ka meeting? Can you attend audit committee's meeting? Answer is no, unless they call you. अगर वो आपको बुलाते हैं, you can go. Otherwise, you have a right to attend general meeting. Next is right of lien. Next is right of lien. Now, sir, what is this right of lien? Lien is withholding someone's property for non-payment of money. Someone doesn't pay your money, you withhold their property, that's called as lien. So can an auditor exercise right of lien on clients' books of accounts? Okay, so ICAEW, Institute of Chartered Accountant of England and Wales, says yes, you can exercise right of lien on clients' books of accounts subject to 4 conditions. That's given in ICAEW. Section 128 of your Companies Act says the books of accounts should be kept at registered office. If at all you exercise right of lien, they are not at registered office. So it is like auditor violating section 128. That will not be correct. And third thing, there's a Supreme Court judgment. There's a Supreme Court judgment, R.D. Saxena versus Balram Prasad Sharma. They say that no professional can be given a right to withhold the returnable documents of client. You cannot go for right of lien. You can go for other legal remedies. ICAI came out with a very simple remedy. If someone doesn't pay your fees, simple, what do? Leave the audit. You leave the audit. Now they need a new auditor. New auditor cannot accept the audit unless the undisputed audit fee of previous auditor is paid off. New auditor will not be able to accept the audit unless the undisputed fee of previous auditor is paid off. Next one is duties of auditor. This is important. Under duties of auditor, section 143 subsection 1, 6 matters. We need to inquire mandatorily, report only if there is adverse comment. 143 subsection 2, 2 matters mandatory to be reported. 143 subsection 3, 10 matters mandatory to be reported. 10 matters mandatory to be reported. 143 subsection 11, it's CG has a power to order additional reporting, and based on that power they came out with one order, CARO. For your December examination, CARO 16 is applicable. Yeah, for your December exam, CARO 2016 applicable, and there are 16 matters mandatory to be reported if CARO is applicable. Okay, let's begin. First, 143 subsection 1. 143 subsection 1 is duty to inquire. 6 matters, inquire, report only if there is adverse comment. Okay, first one they are telling is whether the company has made means given, whether company has made loans and advances, whether the loans and advances made by the company on the basis of security. If secured loans are given by the company, whether they are adequately secured and the terms and the other conditions are not prejudicial to the interest of company. Okay, if they are adequately secured, no need to report. If terms and other conditions are not prejudicial to interest of company, no need to report. Next one, number 2, whether the transactions which are represented merely by book entry, are they prejudicial to the interest of company? Now, transaction represented by mere book entry means which are not supported by adequate documents. Adequate documents are not there. Like all provisions, we don't have adequate document. Depreciation, we don't have adequate documents for it. So if they are reasonable, the things are fine, then they are not prejudicial. But if they are not reasonable, then they are prejudicial. Plus all fake entries. All fake entries are always prejudicial to the interest of company. They have to be reported over here. Third one, where a company is not an investment company or a banking company. You're not an investment company or a banking company, and still you're not an investment company, banking company, and still you have assets in form of shares, debentures of other company which has been sold at a loss. Okay, so as an auditor, we need to check whether the price at which they are sold is bona fide or not. Now, if price is genuine, no need to report. If price is not genuine, then you report. Fourth one, whether loans and advances made by the company is shown as deposits. Loans given, are they shown as deposits? If shown as deposit, report. If not shown as deposit, no need to report. Next, whether personal expenses have been charged to revenue. Okay, any personal expense has been charged off to P&L, the personal expense of directors or officers or employees, whether they have gone to P&L. If gone to P&L, then report, otherwise no need to report. And last, whether any shares have been allotted for cash. If yes, so whether cash is collected. If not, whether it's properly reflected in financial statement. Imagine, shares are allotted for cash. Cash is not yet received, but it's properly disclosed in financial. It is properly disclosed in financials. Do I need to report? Answer is no. And there is one Spargo's case over here. What does that Spargo's case cover? The Spargo's case says, if I am required to pay money to some person, it's a genuine debt. A genuine debt which was payable in cash, later settled by shares. Genuine debt payable in cash at one point of time, later settled by shares, it will be treated as shares allotted for cash. Cash mila nahi hai, if it's properly reflected in financials, no need to report over here. Okay. Achha, just one more thing. Any section, if at all the penalty is not given, the penalty under section 147, the general penalty will apply. If section has given penalty, take that. If section doesn't give penalty, it is 147 is going to apply. Next one, this all was to be reported only if there is an adverse comment. Now 142 subsection 2, mandatory to be reported. 2 matters. So which are the 2 matters to be mandatorily reported? 1, the accounts which we have examined, and second, the financial statement. We write over here like this: in our opinion, to the best of information according to the explanation given to us, the aforesaid financial statement and the balance sheet P&L shows a true and fair view of state of affairs as at this date, profits and cash flows for year ended on this date. So we report on accounts and every financial statement which we have examined. We name the financial statement, the period covered by them. That also is there. This is okay. Now 143 subsection 3, 10 matters. This is important. Okay. This is to be reported mandatorily unless if it is not applicable, you can remove it. So what are to be reported? Number one, whether we obtained all information, explanation which is necessary for the purpose of audit, whether we have sought and obtained. Sought means you asked for, you obtained means you received all information, explanation which were necessary for the purpose of audit. Second, whether in our opinion, now see here the word is in our opinion. When they write the word in our opinion, we start with in our opinion. When they write the word in our opinion, we start with in our opinion. Otherwise, we can directly start. Otherwise, we can start. We have sought and obtained all information. We don't write the word in our opinion. If they write the word in our opinion, we'll start with in our opinion. So whether in our opinion, proper books of accounts as required by law has been kept by the company so far as this appears from examination of those records. Number three, whether the report of branch office audited by a person other than us, other than the company auditor, has been sent to him and how he has dealt with the same while preparing his report. Now, this is applicable only if there is a branch which is audited by other auditor. If there is no branch or it is not audited by other auditor, this is not going to apply. Next, whether the company's financial statement, balance sheet, P&L are in agreement with books of accounts. Books mein figures and financials ke figures are matching. Next, whether your financial statement comply with accounting standards. Next, observation comments of auditor which has an adverse effect on functioning of the company. Now, pay attention. This point doesn't start with the word whether. This will come only if you have observation comment, write it. If you don't have observation comment, ignore it. Next one, whether a director is disqualified to be a director under section 164 subsection 2. As per section 164 subsection 2, the director is disqualified when the company has not filed annual accounts, annual return for a consecutive 3 years, or the company has basically default in payment of deposits or dividend or basically some bank's money, debentures money. You've done a default and the default continues for 1 year or more, then all the directors of that company are disqualified to be director for a period of 5 years. Next, H point, any qualification, reservation, adverse remark relating to maintenance of books of accounts. Now again, this doesn't start with the word whether. Any qualification, reservation, adverse remark, there you write it, not there you ignore it. Next one, whether the company has adequate internal financial controls with reference to financial statement in place and whether they are operating effectively. Now see two things, whether they have adequate internal financial controls and they are operating effectively. IFC reporting is not mandatory for all companies. IFC reporting is exempted for OPC, small company, private companies with a turnover less than 50 crores and a borrowing less than 25 crores. Turnover last year ka, borrowing current years. Turnover last year, borrowing current year, any point of time. And private companies will be exempted even if they meet this, but they should not have defaulted in filing their annual accounts, annual returns. And last one, any other matter as may be prescribed. Sir, is there any other matter prescribed? Yes, sir. 3 matters are there. There are 3 other matters. Which are the 3 other matters? Whether the company has disclosed the impact of pending litigations on its financial statement. Whether the company has made provisions. They've made adequate provision for all long-term contract, including basically your derivative contract, wherever there's a material foreseeable losses. And are there any delays in transferring funds to IEPF? Now, there's one change over here, new update. We have section 197 subsection 16. Okay, section 197 is managerial remuneration. Okay, the section 197 subsection 16 is newly added. If managerial remuneration, is it within the limits of section 197, that is to be reported, and that reporting is a part of 143. So check. The auditor shall report under section 143, will report under 143 subsection 3. We'll add one statement, whether the remuneration paid by company to its director is in accordance with the provisions of section 197 and whether remuneration paid is in excess of limit. So, agar limit se exceeding hai, give the details thereof. Okay, so this was section 143 subsection 3, 10 matters. 143 subsection 4 says if answer to any of the thing is negative, give reasons. Next one, 143 subsection 910. 143 subsection 910 is duty to comply with auditing standards. Whenever you're doing audit, you need to mandatorily comply with auditing standard. This is applicable even though you're doing audit of section 8 company also. Any company, this is applicable. This is 143 subsection 910. Now 143 subsection 11. CG has a power to order additional reporting. Based on that, they came out with one order which is called as CARO 2016, Companies Auditor Report Order 2016. I'll come to CARO. Before that, let me just finish section 143 subsection 12 and 13. I'll come back to CARO. Now 143, 12 and 13 is duty to report frauds. Duty to report frauds. Now there's one very interesting thing, pay attention. If auditor in performance of duties has a reason to believe that the offense which basically individually is 1 crore or above is or has been committed, the word against the company. Okay, 143 subsection 12 is fraud committed against company. Fraud committed by company doesn't come here. I repeat, fraud committed against company by its officers and employees. It doesn't cover the fraud done by company to others. Company ne others pe fraud kiya, that's not covered here. It's against the company by its officers or employee. There's a question on this which will come up. Okay, so if at all while doing audit you found out any fraud done against the company by its officer or employee, individually 1 crore or more, then you are required to report to central government. Now, first of all, you will tell it to Board of Director Audit Committee. Okay, so you prepare a report on fraud. I repeat, you prepare a report on fraud, tell it to Board of Director Audit Committee within 2 days only, immediately or within 2 days you tell them and ask them to reply within a period of 45 days. They will reply about the fraud. Sir, fraud really happened, this issue was there. They will reply within a 45 days. Okay, once you get the reply from Board of Directors Audit Committee, forward your report plus the reply received to CG within 15 days. If individually fraud is 1 crore or more, then only you go to CG, otherwise you don't go to CG. Sir, if replies are not received from Board of Directors Audit Committee, 45 days over, they don't reply, your report you give it to CG and tell that there are no replies received from Board of Directors or Audit Committee. Now, sir, to whom I should send it? Ministry of Corporate Affairs, sir. How I should send it? It should be by way of basically your registered post acknowledgement due or speed post followed by an email. It should be on your letterhead. It should contain your membership number, signature, everything, and the content should be as per the format given in ADT 4. Okay, this is if the fraud is individually 1 crore or more. If the fraud is less than 1 crore, you prepare a report on fraud. You prepare a report on fraud, tell it to Board of Directors Audit Committee. You prepare a report on fraud, tell it to Board of Directors Audit Committee. Write over there the nature of fraud, approximate amount involved and the parties involved. You tell it to Board of Directors, they will write about it. They will write about it in BOD report. Board of Directors will write about it in BOD report together with one more thing, the remedial actions taken by them. And this provision mutatis mutandis simultaneously applies to a cost accountant doing a cost audit, a company secretary doing a secretarial audit. To them also this is applicable, and the penalty is 1 lakh to 25 lakh. Penalty is 1 lakh to 25 lakh. Now section 143 subsection 13 newly added kya hai? Now sir, as an auditor I found out some fraud, I'm reporting fraud to CG. Am I violating the confidentiality of my client? Am I violating the confidentiality? I'm disclosing the confidential information of client? No, they are telling that this is okay. You are safeguarded because you are doing it as required by law. So whenever you are reporting under section 143 subsection 12, you are safeguarded. This is fine. Don't think that I'm basically disclosing confidential information. This is required by law. This is allowed. And the next one is your CARO. Next one is CARO, Companies Auditor Report Order. I told you for December examination, CARO 16 is applicable, not CARO 2020. 16 is applicable. Now, CARO is an order given by CG. This order says, if at all this is applicable, the auditor has to report extra thing in his report. If CARO is applicable, auditor has to report extra thing in his report. So this order is not for company, this order is for the auditors. Okay, order is divided in 4 paragraphs. Para 1 talks about applicability. Para 2 says if or CARO is applicable, report on matters given in para 3 and 4. Para 3 gives the 16 matters, and para 4 says if answer to any of the thing is negative, give reasons. Okay, starting with para 1, sir, CARO applies to whom? CARO applies to all companies, including foreign companies. All companies, including foreign company, except banking company, insurance company, Section 8 company, one person company, small company. Banking, insurance, Section 8, OPC, small, and private limited company fulfilling all following conditions. But private company fulfilling all condition is exempted from CARO, but it should not be a holding company of a public company, or it should not be a subsidiary of a public company. If it's a holding or a subsidiary of public company, then exemption is not available to them. Okay, the private limited company fulfilling all following condition is exempted from CARO. Paid up capital plus reserve does not exceed 1 crore. Paid up capital plus reserve. All reserve surplus are to be included. It should not exceed 1 crore at the balance sheet date. Your total borrowing from banks, financial institution does not exceed 1 crore at any time during the financial year. For CARO, we see the limits of current year. For CARO, we see the limits of current year. So, last day pay, your paid up capital plus reserve should not exceed 1 crore. And loans and borrowings from banks and financial institutions, only from banks and financial institutions, should not exceed 1 crore at any point of time during the financial year. And your total revenue as per Schedule 3, total revenue includes other income also. Total revenue as per Schedule 3 does not exceed 10 crore during the financial year. All three satisfied, CARO will be exempted. Even one of them not satisfied, CARO will become applicable. Okay, this was your para 1. Para 2, if CARO is applicable, you are required to report on the matters covered in para 3 and 4. But one thing, CARO does not apply when you are reporting on CFS. If I am giving audit report on consolidated financial statement, this is not going to be applicable. Okay with this? Okay. Now, para 3 is the 16 matters. Sir, which are the 16 matters? Number 1, fixed asset. Now, sir, is it like a general reporting? CARO is very specific. Under fixed asset, there are 3 points. We just have to write about that 3 points only. Okay, so 16 matters. First one is fixed asset. Under fixed asset, whether the company is maintaining proper record showing full particulars, showing quantitative details and situation of fixed asset, whether the fixed asset is physically verified by management at a reasonable interval, and the discrepancies is properly accounted, and third, the title deeds of immovable property are held in the name of company. Number 2 is your inventory. Inventory may only one thing, physical verification is done by management at reasonable interval, and discrepancies are properly accounted. Number 3 is loans granted to parties covered under register maintained under section 189. This is nothing but loans granted to related parties. If such loans are granted, whether the terms and conditions are not prejudicial to interest of company, the repayment schedule is stipulated and the repayments are regular, and the amount overdue, if the amount is overdue, due date gone, the total amount overdue for more than 90 days, you need to state the amount, and whether the steps taken by the company to recover the amount are reasonable. So we need to write whether reasonable steps are taken by the company. Yes hai to yes likho, no hai to no likho. Next one, fourth, loan to director, intercorporate loans, investments, guarantees. Now loan to director is covered under section 185. Intercorporate loans, investments, guarantees is covered under 186. So whether provisions of section 185, 186 are complied or not. Next one, public deposit. When you accept deposit from public, you act like a bank. So whether the directions of RBI are complied, Section 73 to 76 of Companies Act are complied, and any specific order passed against you, any specific order passed against the company, whether that has been complied or not. Next is costing records. Now, Section 148 subsection 1. Section 148 subsection 1, there are few classes of companies which are required to maintain costing records. If a company is covered, if a company is covered under section 148 subsection 1, whether such costing records are made and maintained. Next, statutory dues. Okay, statutory dues are dues payable to government. Now they have 2 points over here. First one is undisputed statutory dues. Second one is the one which is in dispute. For undisputed, we have to say, we need to say whether the company is regular in depositing undisputed statutory dues to the government authority, and are there any undisputed statutory dues outstanding on the last day for a period exceeding 6 months. It should be outstanding on last day and for a period exceeding 6 months. Second one, for the disputed one, for the disputed statutory dues, we are required to tell because of dispute we are not deposited, amount not deposited, forum where the case is pending. So amount which is not deposited and the forum where the case is pending, that is to be basically mentioned. Achha, just we have received a show cause notice. If I receive a show cause notice, that's not a dispute. I receive a show cause notice, I give a reply, department not happy with my reply, there is a demand notice. There is a demand notice and I go for an appeal, then it's a dispute. Next one is repayment of dues. We have to talk about the default. Whether the company has defaulted in repayment of dues, kiska, financial institution, bank, debenture holders and government. Only these 4 people, financial institution, banks, debenture holders and government. If default is there, the period and the amount of default. Next is 9th one, utilization of issue proceeds. If we have come out with an IPO or a FPO, or even we have taken a term loan, whether they are applied for the purpose for which they are taken. The only important word is purpose. Okay, next one, fraud. Now see the word fraud on or by the company. Okay, if you recall 143.12, 143.12 was frauds done against the company by officer or employee. It's fraud on the company. It was not fraud by the company. So 143.12 covers fraud on the company, but this covers fraud on or by the company both. So company has done the fraud, someone else has done the fraud on company, both are to be reported under CARO. So on the company, by the company. Clear with this? Fraud on or by the company, noticed or reported. If yes, nature and the amount of fraud. Next one, managerial remuneration, whether they are within the limits of section 197 read with schedule 5. Okay, now see this managerial remuneration, CARO 2016 mein it's over here. CARO 2020 mein this point as such is not here. It becomes a part of reporting under 143 subsection 3. CARO 2020 mein it becomes a part of reporting under 143 subsection 3 due to section 197 subsection 16. ठीक है. Next is Nidhi company. Nidhi company, they operate in a similar manner to bank, but for a smaller people, smaller group के लिए, so we have to report whether the net own fund to deposit liability ratio is 1:20. It should not exceed 1:20, and whatever money they have got, they have to keep 10% in unencumbered term deposit with bank or post office. Next, related party transaction. Related party transaction, we have section 188 talking about the approvals required for related party transaction. 177 is audit committee, their approval is always required. So whether they are in compliance with section 177, 188, and one more thing, related party transactions are to be disclosed in notes to accounts. So they have also been disclosed as per the applicable accounting standard. Next, preferential allotment. Next is preferential allotment. Preferential allotment means you are allotting shares directly to a small group of people, not inviting public at large. If there is a preferential allotment made during the year, we have to see whether section 42 is complied or not. Section 42 is for preferential allotment. Next one, non-cash transactions with director. As such, we are not allowed to have a non-cash transaction with director except it is for acquisition of fixed asset. I acquired a fixed asset, I paid them shares, something like that, that's okay. Otherwise, you're not allowed to have a non-cash transaction with directors. So we need to see whether they're in compliance with section 192 of your Companies Act 2013. Last one, your registration with RBI. Whether a company is required to be registered with RBI. If so, whether the registration has been obtained. This is your para 3, 16 matters. Para 4. If answer to any of the thing is negative, give reasons. Oh yeah. Now, this point I already talked. See, fraud has been committed against the company. Against the company. Section 143.12 applies, yes or no? Section 143.12 applies, yes or no? Imagine vendor has done it with the help of employee. Vendor ने employee के साथ मिलके, employee has done it with the help of vendor. Whether 143.12 applies, answer is yes. Okay, now company has committed a fraud. Company has committed a fraud. Whether 143.12 applies? No. 143.12 applies when the fraud is committed on the company, not by the company. But CARO will apply in both the cases. Both the frauds are to be reported under CARO. The question is, how to report under CARO, how to report under Companies Act. The first one will be reported under CARO as well as 143.12. Second one will be reported only under CARO, not under 143.12. Did you understand? Next, section 143, subsection 567, it's powers or rights of CAG. Okay, if it's a government company, CAG will appoint the auditor. If it's a government company, CAG will appoint the auditor, and CAG can give the directions, the manner in which audit is to be done. And when they give you the directions, you need to write in your report directions given, actions taken, impact of that on financial statements. And you need to give a copy of your report to CAG, and within 60 days you need to give a copy of your report to CAG, and within 60 days they can send someone to do additional checking. That's called supplementary audit. Or they can comment upon or add something to your audit report. They can comment upon or add something to your audit report, and whatever comment CAG is giving, that is also to be circulated to all the people who are entitled to receive the financial statement. Those people who get financial statement, audit report, unko CAG ki comments are also to be given. Plus CAG can send someone to check your work, that's called test audit. They can send someone to check extra thing, that's supplementary audit. They can send someone to check your work, that's test audit. Test audit can be conducted even after 60 days as well. Test audit can be conducted even after 60 days as well. Next is 143 subsection 8 is branch office ka audit. Okay, who can be a branch auditor? The company auditor himself, any other person who is a chartered accountant holding COP, that can also be appointed. If it's a foreign branch, we can have a person qualified to be appointed as auditor as per that country's law, only for foreign branch. Foreign branch means that country's law. And a power to appoint branch auditor can be delegated by shareholders to board of directors. The branch auditor will have the same rights, duties, everything. Section 143 will apply to him also. If CARO is applicable, branch auditor also has to report on CARO. If CARO is applicable to the company, the branch auditor also has to report on CARO. Everything will be remaining same. Only thing is his rights and powers are only with respect to branch, not for the HO. He has a right to access branch records, not HO's records. Okay, and branch auditor has one extra responsibility. He has to give a copy of his report to the main auditor. He has to give a copy of his report to the main auditor. This was section 143. 144 we already did. 145 signing. 145 is signing. Who can sign the financial statements? Audit report kaun sign karega? If individual is appointed, that individual has to sign. If firm is appointed, any partner who is a chartered accountant holding COP can sign. Can I allow my employee to sign on my behalf? Answer is no. 145 over. Now we keep it up till here. We keep it up till here. We have another session again at 9 o'clock. We take a break half an hour and we'll finish off the remaining portion of your company's audit plus schedule 3. Yeah, I'll also finish up schedule 3, only the important things in schedule 3. You just have to keep your ears open, listen to the things, that's it. I hope you are comfortable. Any suggestions from your side, please tell me. This was the first session, so any suggestions from your side, please tell me. This is a detailed revision kind of. Whatever is there in your material, we are actually kind of revising. Thank you, Pradeep. Thank you, Sandeep. Thank you, Bala. Any suggestions you have, you can tell me. We again will be meeting 9 to 10:30. And I remind you, today we are having the sessions on YouTube. Tomorrow onwards, it will be on Unacademy. It's a free classes. You can unlock that free classes by using the code Yeshesh or Yeshesh Life. Okay, Mohit has a question, sir. If possible, more questions, please. Mohit, if at all I try to take questions also, the time will not be sufficient. So whatever points I feel are important where the questions can come up, I'll tell you that time. I'll try to give more questions from my side. Okay, Pradeep, sir, how much is the duration for the next session? Today we have 9 to 10:30. From tomorrow onwards, it will be 6 to 8, 8:30 to 10:30. From tomorrow onwards, it will be 6 to 8 and 8:30 to 10:30. So total 5 days. Today is first day, 4 more days. Done then. Chalo, we meet again at 9 o'clock. Enjoy your break.